The biggest benefit of sitting in London looking into South Africa is the differentiated and holistic view we have on the South African economy, which we ultimately look at as an unemotional piece in the emerging markets puzzle. Our interactions, be it professionally or socially, with peers in the emerging markets universe gives us perspective on the mindset of the foreign investors South Africans have relied on for capital for so many years. Unfortunately, I can't add much that would suggest the South African equity market is an interesting hunting ground for fresh investment ideas. Emerging market investors are typically growth tourists, and in the absence of growth or any tangible solution to stimulate growth, the attention of the investor community is easily lost and ushered into more interesting investment opportunities, particularly in emerging Asia. With the growth prospects far greater and governments far more proactive in laying economic frameworks to take advantage of structurally attractive economic tailwinds, the Asian markets have dominated the investment resources of the big EM teams we interact with. A common misconception is the team size of some of the bigger EM funds. Often the teams that cover the EM universe or work on EM equity mandates are not as big as you would think. For South Africa, this ultimately results in even less resources being allocated to finding bottom-up ideas in a market that doesn't screen that attractively from the top down. On the bright side, credit in emerging markets dominates the bigger allocations of EM capital. And on these metrics, South African government bonds do screen as attractively valued in a world where it's quite hard to find bonds yielding a positive real return. South Africa is currently close to 4%. The South African FX and bond market is large and liquid, and most of the larger funds we interact with are happy to take exposure to South African fundamental factors through these markets.